Okay. And all right, we're going to go live in 3, 2, and 1. Well, we thank all those that are attending from our PASBA partnership. This is Don Wilczynski with Tried and True Consulting. Today we are covering our first of 3 seminars that are revolving around payments in the payments industry. The content that will be presented today is Demystifying Payments. As a reminder, the call is being recorded. Should you have questions, I'll be moderating today's call. And should you have questions, you'll be able to ask questions in the chat, which I will manage. And we'll be taking those questions and answering them at the end of our dialogue. So today, again, we thank you for joining, and we look forward to educating you on demystifying payments. Today's agenda will include this short welcome. In addition, I'll provide some additional context for today before I turn over the call to Scott, who will be covering interchange and how the rates and fees work and who gets paid with the money that is collected from the transactions. Our keynote speaker today will be Rob Johnson from Visa. We'll be introducing him in just a short while. And then we'll conclude with pricing options and a wrap up by Don and myself, Scott and myself. Our panelist for today is myself, Don Wilczynski. I'm the CEO of Tried and True Consulting. Our host today and one of our speakers will be Scott Knabusch, our managing partner for Tried and True Consulting. And our featured speaker today will be Rob Johnson, Director of Visa, and we'll do a formal introduction here shortly. As a quick disclosure, just a couple of quick reminders that the primary objective is to educate and inform you on the basic understanding of card cost and rules associated with accepting credit cards. Today will be a hyper focus on Visa, but just understand that most of the rules are applicable to all cards. Information that will be shared today is actually based on the actual cost of doing business. The host and moderator have a combined years of 55 years in the payments industry, additional 5 years in banking and card issuing. So we do feel like we're going to provide a high level of information that is from people that are well trained and understand this business from both the card processing and the acquiring, it's called, and the issuing side. And our featured speaker today will be providing, and Rob Johnson will be providing the rules, regulations, enforcements, and fines that are associated with the card brands when you are going to embark on using one of the methods for passing fees on to cardholders. He'll be going through a thorough explanation of that. Today's questions we will answer will include what makes up the rates and fees that you pay as a business. Where does the money go and how is it collected? What's the different pricing options that are available today, given some of the changes over the last several years in card processing? What are the rules when you are going to pass on the charge to or fee to a cardholder? Who's involved in the payment process? And do the rules apply when I accept other forms of payment like ACH and cash? And lastly, we're going to provide a nice illustration to help you understand the pricing options that are available, and we look forward to providing that content. So without any further ado, I'll be turning this call over to Scott Knabusch, again, managing partner for True Consulting in our PASBA relationship.
All right. Well, thank you, Don. And just to confirm, Don, you can hear me, right?
We can hear you.
Okay, great. Well, hello, everyone. As Don mentioned, my name is Scott Knabusch, and I'm very excited to be here and continue to grow our partnership with PASBA and our relationship. And as Don mentioned, what we're going to cover today, in my piece specifically, is providing this education is a very important component of our relationship. And so what I want to try to do is just set the stage with some of the basics of some of the specifics around accepting card payments. And then I'll be excited to introduce our keynote speaker, Rob Johnson from Visa. But I just want to cover the basics that will then lead into his conversation. So we're starting here, as you can see, and it illustrates who's involved. And I always like to share that in educating our customers or partners, there's 3 basic components of the cost of accepting card payments. And you see that illustrated with the 3 different colored circles here on this slide. So I'll start with the kind of the yellowish orangish circle that you see there at the bottom that says issuing bank. And that represents the banks that issue the credit or debit cards to your customers that ultimately make payments or make purchases. And that represents what you might see on your merchant billing statement as the interchange costs. So the first component there is the issuing bank, and the revenue from those interchange costs goes to the bank that issued the credit or debit card. And on the right-hand column there at the very top, you'll see that the issuing banks in that interchange cost represents approximately 70% of the cost of accepting card payments. So it's by far the largest component of the cost of accepting any cards for payment. Secondly, you'll see there in green the card associations, and that's effectively known as the card brands. And the four most common brands in North America would obviously be Visa, MasterCard, American Express, and Discover. And as Don mentioned, we couldn't be more excited about having Rob here today to represent Visa and speak to all the specifics, and we're going to get to that here momentarily. But the card associations have a fixed fee that you might recognize on a merchant billing statement as assessments. And we'll have an illustration that goes through this. But basically, and I don't want to steal Rob's thunder here, but on a very overly simplistic perspective, the card associations provide all kinds of research, and they assess and monitor and report on risk to all parties in accepting card payments, and provide that to the banks and to the processors. So they play a key role in helping eliminate and reduce fraud, among many other things. But that's a key component of accepting cards is avoiding the fraud and the costs associated with such. The third part you see represented in blue is the payment processor and the sales organization. Sometimes those are one and the same, sometimes they're separate. And as you might guess, the payment processor provides the service, provides a local sales representation, a local support, helps set up the account, and takes care of all that on a local basis, and is the face of the merchant account. And that represents approximately 20% of the cost. So Don, if you can go to the next slide, we'll kind of go over an illustration of what this looks like on a typical transaction. And again, this illustration here is on what we would call a card present transaction, where the card is present at the time of the sale, where you can swipe it, tap it, or insert the chip. And just for simplicity purposes, we're using a $100 sale to make the math easy for me, and using a basic discount rate of 2% with a 10-cent transaction fee. That's a very typical, common pricing method. And so, sticking with the same three components, one thing that you'll see on the bottom here, and before I go through this, I want to point out that I failed to mention on the previous slide something that I think is important. 2 out of those 3 components are what we like to represent and as uncontrollable costs, meaning there's not much you can do about those. And that would be the interchange cost in the yellow, and the assessment fees in the green. And while the interchange costs can vary based on multiple factors, which we'll get to in the next slide, you still can't do much about it. They're fixed. Every merchant, every business pays it. And quite frankly, you know, the Walmarts of the world pay the same interchange and assessment costs that your firm might pay, or what your business customers would pay. The markup from the processor is where the variable part and the negotiable part comes into play based on your volume. So I wanted to kind of level set that as we go through this illustration. So back to this example, using a basic credit card on a $100 sale, you'll see in that yellow box on the left, the rate is 1.51% and 10 cents a transaction. So simply on a $100 sale, it's $1.61 of cost on that one transaction. The assessment costs, which again are fixed, They vary based on the card type, but they're all very, very similar. They average about 0.15% of the face amount of the sale. So in this example, again, that's simply 15 cents. And then the processor, they take those costs, they add their costs and their markup for their profit. And in this example, we said the processor is providing a discount rate listed at the top there of 2% and 10 cents. So they simply pay the issuing bank, pay the associations, and what's left over, the remainder, is their profit. In this example, the profit would be 0.34%, or on a $100 sale, 34 cents. And again, the processor, out of that 34 cents, that covers not only their cost, but then also whatever profit that they want to make. Okay, so those are the three parts. And so I just want to kind of wrap that up a little by pointing out that anytime we would do a no obligation analysis, whether it be for your firm or behind the scenes for one of your business clients, what we typically do is I try to analyze that merchant statement to identify the costs that fall into each of these three columns, or buckets, as it were. And the two that are uncontrollable, that are on the left, we kind of push those to the side, and we focus on what is controllable, what is variable, and try to help eliminate or reduce those for you and or your customer. So just to kind of further illustrate that and the example, Don, if you can progress us to the next slide. Now, this is a little bit of an eye chart, but it's really more simple as you go through it here. And so we've separated this in three different columns of basic cost differences. So in the first column on the left, you'll see card present card types. In the middle column would be card not present, and third column would be business or commercial cards. So let me just start on the left and I'll move to the right. So the first thing to note is, for card present transactions, the lowest cost card type you could accept a payment for is a debit card. And the debit cards fall into two categories. We don't have the categories labeled here necessarily, but they're either regulated or unregulated. The regulated are the big banks that issue cards, like Bank of America, Chase, for example. And they're regulated and can only charge 0.05% and 21 cents a transaction. And Don is creatively using his mini mouse there with the arrow to kind of help illustrate for us a little bit. Now, the smaller banks, like regional banks, community banks, and credit unions, they are allowed to charge a higher interchange rate, and that's the 0.80% and 15 cents per transaction. So all debit cards will fall into one of those two categories. So the cost can range from those two. Then if you go down to the next card type in the middle in the blue, you've got a basic Visa credit card, what often we call a core credit card. And when we say core, what we mean is there's no rewards, there's no points or anything like that. It's just your basic credit card. The rate on that is 1.51% and 10 cents a transaction, which is much like the illustration we had on the previous slide. And then the next higher cost, if you go down to the bottom card in the first column where it says Visa Signature, these are the reward cards. And over the years, there have been an increase of different types of rewards. And what you'll find is as the amount of reward to the cardholder increases, that's built into the interchange cost that a business incurs in accepting that card type. So like here, this Visa Signature, you can see that the interchange cost can range from a low of 1.65%, which is higher than a core credit card of 1.5, and can go as high as 2.7%. And that rate varies, again, based upon the amount of reward going back to the cardholder, your customer. So I hope that makes sense in that first column. And so what we've talked about here up to this point in the first column on the left is all card present. You've got debit at the top, core credit in the middle, and then reward card. And if you go to the middle column, this is where card not present transactions are always going to be higher when as compared to card present. So think about taking a payment over the phone, or for businesses that accept payments through their website, or maybe an electronic invoice or a link sent in an email. Card not present transactions carry more risk in accepting payments from those as compared to card present, simply because less information is passed through at the time the card is being authorized. So therefore, there's less information to verify the cardholder is who they say they are and that they're authorizing that sale. And so that higher risk is reflected in the card not present rates being a little bit higher. So if you look at debit, the one exception to that are those regulated debit cards, the cards issued by the big issuing banks. So you'll notice that the rate 0.05% and 21 cents for a card not present debit card only on regulated is exactly the same interchange cost on a regulated card present and swiped. Okay, but the keyed rate is higher on the unregulated, a 1.65 and 15. And then as you go down, a core credit card 1.80 and a dime, which is higher than the card to the left at 1.50 and a dime. And then in the bottom row, the Visa Signature Reward Card, that rate is higher when the card is not present as compared to card present to the left. And you can see the range of 2.45 to 2.95%. And again, that varies based upon how much points and rewards are going to the cardholder. And then the last column are business or commercial cards. So those cards cost more than a consumer card. Up to this point, the first two columns on the left are consumer cards. The third column is a business card. But the same relationship follows with business cards, where you've got the business debit card and you've got the regulated and unregulated on the top right, which is the gray card. And then beneath that, in the middle, the Visa Business Core Credit Card. That is the card present rates, and it will be higher when the card is not present. And then you've got a Visa purchasing card down at the very bottom there on the right. And those cards are highly specialized for businesses that are wanting to make purchases. So this just gives you an example that based on the type of card, the interchange cost will vary. Debit's the lowest, credit is a little higher, reward is a little higher than that, and commercial or business cards are higher than that. And similarly, you've got card present, where you have the ability to swipe the card, which is the old terminology, but today would be tap or insert the chip. That's the lowest, as compared to card not present from phone or internet would be higher. And so that hopefully helps provide some understanding of what makes the interchange cost vary. So again, the interchange cost as a whole is unavoidable, but it does vary based on the type of card. So with that being said, I'm honored to introduce our keynote speaker, Rob Johnson. He's spent over 20 years of industry experience with Visa in different roles. Currently, he is the Senior Director of Rules and Management, and we couldn't be more honored to have him with us here today, because pricing has gotten can be very confusing. There's some new programs out that are available, and there's oftentimes misinformation in the marketplace. So without further ado, Robert, thank you. Please take it over and share with us your expertise today about some of these programs and the rules to do them properly.
Excellent. Thank you, Scott, and thank you, Don, for the opportunity to be here today to present on this very important subject for Visa. As you can probably tell from my accent, I'm obviously based in California, yeah, I've been with Visa 23 years now, formerly an issuer prior to this, and I've lived and breathed these issues and Visa rules my entire career. So yeah, what I've been asked to come and explain about today is what we're the ability to price Visa transactions to your cardholders. Now, I will start by saying that there is, Visa's view is that Visa card acceptance adds a tremendous amount of value. I think there's, when one thinks about the environments in which card transactions are accepted, the alternative to card is generally either cash or check. Both of those come with risks. With cash, you've got counterfeit, you've got theft, you've got the effort of taking it to the bank and depositing or paying for a security company to come and collect that cash. With check, you have similar sort of issues, probably not theft, but you certainly have cancellation of checks and the lack of guarantee of payment. And so, Visa feels there's a tremendous amount of value baked into card acceptance, the cost of some of which should be borne by those accepting the cards to begin with. However, that said, within our rules, there remains several avenues under which, under very specific circumstances, which I'll go through today, a merchant may charge a cardholder an additional fee or apply differential pricing for a card payment versus an alternative payment method. These three examples that we're going to go through today are, if we can click, I think there should be another, there we go, thank you. So the first one I'm going to talk about is surcharging. It's probably a subject you're very familiar with. It's a little bit, I won't say rampant, but we have seen a dramatic expansion in surcharging in the US over the last few years. I'm going to talk about convenience fees as well, which is a very hot topic at the moment. We see the federal government talking about junk fees and so on, and convenience fees certainly get swept up into that subject. And then I'm going to talk about service fees. In fact, I'm going to do them in slightly different. I'm going to do surcharges, service fees, and then convenience fees. And then the last piece here, which I'm not going to go into detail today because it's not an additional fee, but it is something that all of us, I'm sure, will be very familiar with, which is the ability, and this is a US only ability, this doesn't exist in any other Visa market, for a merchant to offer an incentive to price lower for alternative payment methods. And the most common example one would see of that, which we see every day, is at petrol stations, where they display both a card price and a cash price per gallon. That has been permitted for a long time in the US. It's not a fee for Visa acceptance, because the nuance to it is that the price the customer sees must always be the card price. So you can display the card price and then offer a discount to it for cash, but you can, or you can display both prices simultaneously, like we see at petrol stations. However, what a merchant cannot do to qualify for a discount under this rule is display the cash price and then add a fee for the card. If they do that, then it falls into either surcharging, convenience fees, or service fees. So it's an important distinction that I wanted to kind of push home there, that when dual pricing is absolutely permitted, but the card price must be displayed everywhere. Everywhere the price is displayed. Anytime a merchant says, well, that was the cash price, that was the only price you saw, now this is the card price and it's higher, it is going to be a surcharge, a convenience fee, or a service fee. Okay, so let's, moving past that, I want to jump on to, let's talk about surcharging. Now, I'm going to start by also admitting these, the differences between these pricing models are incredibly nuanced, and they may feel very subtle, but I have to emphasize that they are also extremely critical. And we'll talk about the enforcement and the compliance piece later, but it is in some of these nuances where we see, unfortunately, frequent rules violations. So let's talk about surcharging first. I think if we could, thank you. So these are the criteria or requirements around surcharging. Now, you'll notice some of the text is in bold. What I've done is by putting that text in bold, that is to highlight what Visa sees as the most common rules violations of these particular payment strategies. So the first one, and this is the most common violation, not only we see in surcharging, it is the most common rules violation of any rules violation Visa sees in North America today. And I would tell you, my team, I run a large rules compliance team as well as a rules development team. We field about 6,000 complaints a year currently from US cardholders and issuers around surcharging. You know, we've looked at it. It is not just down to the fact that US consumers are better at complaining than non-US consumers, but it is largely down to a number of surcharging deployments that have been poorly implemented in the US. And I've been traveling the US this year, presenting to conferences, and you know, in the media, being very vocal about how we expect these deployments are poorly implemented, and that we are very active in correcting this. So importantly here, surcharge can only be applied to a credit card. And Scott did a fantastic job talking about pricing and differentiating between the products. So you know, hopefully it's only a small sort of reminder here that a credit card is exactly that. It is where one borrows funds against a line of credit. If you're using the card that comes straight out of your bank account, or if you're using a prepaid card, that is a debit card. And you simply cannot surcharge debit cards. And the reason we don't allow that is exactly the pricing reasons that Scott outlined earlier. Debit card transactions are generally priced significantly lower than credit card transactions. And when we negotiated that pricing reduction for debit cards, the offset was, well, then we will allow you to surcharge on credit. But since there's a pricing reduction on debit, one cannot surcharge on debit cards. And one question that frequently comes up, and I would tell you, as an Englishman who moved to the US initially with his English debit card, when I would, you know, back in the days when you would swipe the card, and I would be asked, is debit or credit? That confused the heck out of me as an Englishman, because I knew it was a debit card. And really what that means is, do you want to put a PIN which goes down the debit network route, or do you want to put a signature or no signature? And that's often referred to as credit, but I want to be clear, that is still a debit card transaction. So even when the cardholder selects the credit option on a debit card transaction, it is still a debit card and surcharging is not permitted. What they really should be saying, and it would have helped my confusion when I moved to California, was, do you want to put a PIN in, or do you want to sign for this transaction? The debit and credit references are misleading. But it is only credit card products that can be surcharged. The next one, surcharge cannot exceed 3% or the cost of acceptance. Now, the cost of acceptance, Visa is, and again, Scott, you did a fantastic job, MDR, the merchant discount rate. That is the merchant's cost of acceptance. In Visa's rules, which I'll show you how to find later, we define what the cost of acceptance is, but generally it's the average cost of acceptance or the average MDR over the last year for that merchant. But 3% is the absolute cap. But if the merchant's only paying 2.5% as a blended MDR on all their transactions, then the maximum surcharge they can pass on to the consumer is 2.5%. If they are paying more than 3%, then they still cannot surcharge more than 3%. And I would probably advocate, if you are paying more than 3%, you might want to look for a cheaper acquirer, because that amount is generally fairly significantly above the average cost of acceptance. The next rule for surcharging is it must be included in the total transaction amount. It cannot be a separate transaction, so you cannot charge them for the goods and then add process a separate transaction for the surcharge. There is a requirement as well that when a merchant decides to start surcharging, they must inform their acquirer, and they must wait 30 days before commencing. And the reason being is actually largely related to the next line, which is we have specific data requirements and we have signage at both the point of sale and point of entry requirements, as well as disclosures on the Visa transaction receipt that need to be implemented before a surcharge can be applied. So, you know, if you just start surcharging today and literally decide I'm going to add 3% to every Visa credit card transaction, I guarantee you'll be violating our rules, because that surcharge amount won't be in field 28 in the transaction record, and you won't have the right signage at point of sale, point of entry. Now, another interesting element of surcharging is it is not actually legal in all states. Now, this is based upon the state where the merchant is located, not where the cardholder has originated from. So there are 4 states still in the US where surcharging is illegal by state law: Connecticut, Maine, Massachusetts, and Oklahoma. So no surcharging can be permitted in those states, even though our rules allow it. State law or local law always prevails over Visa rules. The next one is New York, and the reason I put an asterisk next to New York is in, I think it's February 11th of this year, New York enacted a junk pricing law because, and we really feel this was a significant driver of this, was a lot of these bad surcharging solutions that have been deployed throughout New York. There's a lot of companies deploying these solutions that are based in New York and selling them. But it was also a reaction when you read the press and the justification from the AG in New York and the governor. It was in response to things also like convenience fees and all these additional fees that get added to a transaction. So essentially what they did in New York, rather than directly prohibiting surcharging, which is what Connecticut, Maine, Oklahoma, and Massachusetts did, they passed a law that said the price the customer sees must be the price they pay. They pay, no exceptions. And what in their guidance, what they said was, you can display the card price only, or you can display both prices, the card and the lower cash price. But what you cannot do is display the cash price, the lower price, and then when the customer presents the card, surprise them with an additional fee. And again, it's not just to do with surcharging. It relates to convenience fees. So you can't, in theory, go to a New York show on Broadway, and look at a ticket price, and it's $100 to see Hamilton, and then when you go to pay, suddenly they're adding on, a $15 convenience fee that you never saw linked to the actual ticket price when you were first displayed the ticket price. So, but essentially, what they did in New York through that legal change was ban surcharging. And then the other state that has a piece of legislation in place right now is Colorado, who have capped their surcharging to 2%. So again, their local law prevails. So even though we say 3% in Colorado, no matter what your MDR, your merchant discount rate is, one cannot surcharge more than 2% in Colorado. And there are other states that are working on these. The California law, the California strict pricing law just came out. Unfortunately, for me as a consumer, they made a last-minute concession allowing restaurants and food retail businesses to add on things like a 4% COVID recovery fee, a 3% healthcare ordinance, which I personally as a consumer drives me absolutely crazy. If it's an $18 burger, tell me it's an $18 burger. Don't tell me it's a $17 burger and add another dollar on top of that when I go to pay. But California's law was written in a different way, whereby paying with card becomes an option, and therefore surcharging is applicable because you're choosing to pay with a different method. But nonetheless, there are other states. Pennsylvania is one of them, where there is a pricing law working its way through the state that we suspect will be very similar to New York, but equally could have a slight angle on it like California. But those are the rules around surcharging. As I say, they are quite nuanced. At the end, I'll show you that we do have guidance, public guidance on visa.com, how to do it properly, and some considerations, and we'll come to that later. But that's surcharging. I want to talk briefly now about service fees. Thank you. So service fees are a very different animal. I think largely they're not applicable to this group, but I wanted to include them for a holistic picture of how the options for pricing Visa transactions, because I'm sure you've experienced service fees. Now, one thing I should say, it doesn't matter what the merchant calls the fee. If it's a fee on top of the price, and it's purely for the acceptance of a card, it is a surcharge. Doesn't matter if they call it a service fee. Doesn't matter if they call it a convenience fee. Visa will treat it as a surcharge. It will fall under our surcharge rules. Now, we do clearly define service fees. So service fees can be a charge to all card types, but they are only in these merchants. And I apologize for the text being really small. It's hard to fit all this onto one screen, but there are, I think I'm looking, 9 MCCs there in the US where we allow service charges to be assessed. Primarily, they fall into the government and education sector. So if you don't qualify for one of these 9 MCCs in the US, you cannot apply a service fee. I would say, speaking personally, and only my experience in California, every time I renew a vehicle registration with the DMV, they charge me a service fee. If I wanted to pay my property taxes or my income taxes online using a card rather than ACH, I'm likely to pay a service fee. And it will vary by product where I'm using debit or credit. But you can see DMV, property taxes, income taxes, they're all government and education. So that's why I suspect we've all experienced correctly applied service fees. Now, some of the differences with service fees are, again, I've mentioned it, they can be applied to all card types, unlike surcharge, which is credit only. They can be for a fixed amount or a percentage. So we don't differentiate that. And that's important when we talk about convenience fees, which will be on the next slide. The entity charging the service fee must be registered with Visa first. That's a critical piece. We give that entity a value called the MVV, the merchant verification value. That value gets passed in the transaction to Visa, so we can verify who is charging the service fees. Unlike surcharging, these fees can be charged they can be included in the transaction, or they can be charged separately. They can also be charged by a third party, which you cannot do with surcharging. And when we talk about convenience fees, you cannot do that with convenience fees either. There is no limit on the amount of the fee. Now, it makes sense to not make these excessive fees, but unlike surcharging, we do not cap the amount of the fee. There are no transaction data requirements, with the exception of the MVV, which I mentioned, but that is going to go on every transaction for the service charge. And then lastly, there are no state restrictions. Unsurprisingly, the states didn't pass rules preventing themselves charging fees to US residents. But that's another difference with these. And again, just to highlight, the two in bolded are the ones where we see the most common violations. They're either not registered, or we see an entity who doesn't qualify for service fees charging service fees. But again, just not to labor the point, even if a merchant calls it a service fee, if they are not in that government education sector, and if they are adding it purely for the cost of card acceptance and don't charge that same fee for other payment methods, it is a surcharge. The naming convention is irrelevant from a Visa point of view. And again, we'll talk about compliance later on. Okay, that's summarizing that. I want to talk about convenience fees. And again, this is another one where I think we're all quite familiar with these. The term convenience fee, again, often gets bandied around, particularly when you're going to a merchant and they want to charge you 3% for using a Visa card, and they describe it as a convenience fee. It's convenient for them to charge that fee, but it is still a surcharge. Now, what is the purpose of convenience fees? I'll give you a bit of a background. The reason we created or began to allow convenience fees goes back about 25 years, and it was really with the rise of the internet, where merchants started deploying new channels, the majority of which were e-com. And the idea of the convenience fee was ideally to offset the cost of that channel. Now, and with that lens in mind, this is kind of leads into why these rules are this way. So let me talk about the sort of criteria for convenience fees, and I'll tie some of that back to the justification for creating them. So the first one, and again, if I'm going to talk about the most significant violation Visa sees here, it is this first one, which is that the fee must be applied equally to all accepted payment methods, and that's in that channel. Now, Visa describes the channel. It can be the website, it can be a telephone call center. But every card payment method accepted in that channel must be assessed the same convenience fee. If you're running a website and you charge your cardholders 3% to pay with a Visa card or 0% to charge with an ACH, doesn't matter that you call it a convenience fee, it's a surcharge. It's no longer a convenience fee. And again, going back to the justification for generating this fee, the idea behind the fee is it's there to offset the cost of acceptance. And not the cost of acceptance, the cost of that channel. So if you are charging only that fee for cards, you're not doing it to offset the cost of the channel. You're doing it to offset the cost of accepting that card. Ergo, it's a surcharge. So that's the most common violation we see. We get to say it's a convenience fee, it's 3% for card, 0% for ACH. It's a surcharge. It's a surcharge. It's unequivocally a surcharge. Now, to that point again, offsetting the cost of the channel. The fee must be a flat, fixed amount. It cannot be ad valorem. It cannot be a percentage. Because if you think about it, if one is charging a differential fee, if I spend $100 on a website and they charge me 3%, so I'm paying $3, and then I spend $500 on that website and they charge me $15, that cost of the value of the transaction should have no impact in the cost of providing that channel. It's irrelevant. So again, if it's as a percentage, it's going to be treated as a surcharge. So again, that's another violation, common violation we see. The convenience fee, I'm going to use, since on video, I can use my air quotes. The convenience fee is must be a fixed amount. If it's an ad valorem, it is there to offset the cost of acceptance, not offset the cost of the channel. Now, another most common violation, merchant must support a convenience fee-free channel for card payments. So you cannot be an online-only merchant and charge a convenience fee. Visa's view, and in fact Visa's rules, is if you are only an e-commerce merchant, the cost of your website should be baked into the pricing of your goods. It's the same way, if you're going to say delivery is free, then that delivery should be baked into the cost of the goods that you're selling me. So if the merchant does not have a physical or an alternative channel, then the convenience fee cannot be assessed. So the cardholder must be able to pay with a card to avoid the fee. Where we commonly see this, when I book my flights back to England, see my family, I go to British Airways, I go to book my flight. There are no fees for booking the flight, or at least no card fees for booking the flight on British Airways on their website. But if, for example, I want to call their call center and book the flight that way, they will charge me a $20 convenience fee because they're having to apply additional resources to manage that purchase in that way. And that's a common example where we see the convenience fee applied correctly. A question that always comes up here, so I'm going to try and preempt that, is, well, what about the box office? That's probably the most common place where we see that. They're a little bit of an older, more historical model there, but generally the principle that applies, and I'll give you a real world example. 2 years ago or 3 years ago, I went to Antigua to watch England play cricket against the West Indies. Now, I bought my tickets from California. I paid a convenience fee. Now, if I wanted to avoid that fee, I could have flown to Antigua 6 months ahead of time, gone to the box office at the Viv Richards Cricket Stadium and bought the tickets and avoided the $3 convenience fee. That I could have saved the convenience fee, but it wouldn't have been convenient for me. But nonetheless, they had a fee-free channel that I could do that. And the same applies. Yesterday at the Visa offices, we're right next to the ballpark in San Francisco. The Giants were playing the White Sox, I think it was. And I could have booked, if I wanted to go, I could have booked my ticket online and paid a convenience fee. Or if I wanted to avoid it, I could have walked across the street to the box office bought the same ticket but not paid a convenience fee. So the fee-free channel is absolutely critical. And again, it's a common violation. If it's not there, it doesn't qualify as a service fee.
Rob, can I pause you for a second and give you the quick question? Because this is with the audience, we have the accounting firms. In their scenario, if they push a payment link or they offer, the hosted payment page for they can charge what I'm hearing you say is they could charge a convenience fee there. And if the person chooses to come into the office, they don't have to charge a fee because they're collecting it right there in person. Is that the equivalent of your British Airways example?
Yeah, I mean the in-person is your fee-free channel.
Okay, thank you. I just wanted to. I know with this audience, that was a perfect example, and I just wanted to see if that would apply to them as well.
That's a great question, Don. It's a great question. So next thing, fee must be included in the total transaction amount. Can't be a separate amount. It cannot be assessed by a third party. Remember, only service fees can be assessed by a third party, and only service fees can be a separate amount, as a separate transaction. Equally, and again, good news, there's no registration requirements at all. And it is legal in all US states, with the recent caveat that I added there. Remember, for states like New York, now you cannot say, here is your bill, it's $1,000, and here, if you want to pay, here's the convenience fee. You can't disclose that fee later. So anytime you're talking about payment for goods and services, you have to disclose in New York the fact that if you pay through this method, this is your price plus this convenience fee if you're going to pay through this method. It's a state nuance. It's not something Visa's particularly concerned about, but I will tell you in New York, obviously they went to all the effort of passing this law. They're very focused on this, and they've actually even established a reporting channel to the state AG for violations of the surcharge and convenience fee rules in New York. And we don't know what action they will take. They talk about $500 fines if it's done incorrectly. I would tell you right now, that's a lot less than the fine from Visa. But it could also drive, if you see a merchant continually flouting that law and the state receiving complaints, it could have a downstream impact on things like license renewals to operate in that state. So it's very, we strongly advocate when you're looking at these models, if you're in New York, you make sure everything is 100% transparent. Even if Visa say, you don't have to do that for our rules, remember state law, local law prevails. So you don't want to fall afoul of that trap. Okay, I realize there's a lot there. There's a lot there. So I want to talk quickly about the compliance piece on the next slide. So what do we do about that? Well, guess what? We have a rule about compliance. At Visa, we do two types of compliance. We deal with reactive compliance. These are the inbound complaints that come to us. Like I say, we get about 6,000 complaints in the US a year right now, the majority of which, almost in excess of 70%, relate to surcharging. So we have that ability. And again, I run a large compliance team based both in California and in Atlanta, Georgia, who raise compliance cases and deal with those complaints. We also do what we call proactive compliance. And proactive compliance is where we actually go out looking for violations. So right now we have a large mystery shopping audit going around the US. We've audited 130,000 merchants in the last 2.5 years to identify invalid surcharging practices. We've been auditing independent sales organizations who sit sometimes between the acquirer and the merchant and offer these pricing solutions to make sure they are compliant. And there are consequences. The fines we charge $1,000 for a case fee if we open a compliance case, knowing that it is either clearly or very likely a rules violation. If that complaint goes unaddressed Depending on the rule that's being violated, the first fine can be anywhere from $5,000 to $25,000, and that fine will increment by the 25,000 will increment by $25,000 per month every month it goes unaddressed. So yeah, 25,000 month 1, 50 month 2, 75 month 3, and so on. The other fine starts at 5, then it goes to 10, then it increases by 10,000 a month. So the fines are significant, and I would say each year my team fines well into the 7 figures for these types of violations. Now, to be clear, we fine the acquirer. We don't fine the merchant. We don't fine the independent sales organization. We fine the merchant, the acquirer. But it's the acquirer then who decides who's ultimately to blame for this rules violation. And some of them absorb it themselves because they failed to educate their merchant or intercede with some of these pricing practices. But it is something we are very dedicated to. As I mentioned at the start, we're not a fan of these pricing practices. We are, in some instances, legally obliged to allow them. In some instances, like convenience fees, we realize and service fees, it was a way to gain that market share and get into that vertical. But Visa does insist that when implemented, they are done properly in compliance with both Visa's rules and any local laws. And I think the last slide before we go into questions, I don't want to take it too much. Where do you find out more? We have more information out there. If you went to, there's a link here, I know you can't click on that, but if you went to visa.com and typed in rules in the search bar, it will take you to the Visa rules page. And in that page, you can download the Visa rules. There's a whole book. You'll have a wonderful time reading them. It's about 1,100 pages. And it's a guaranteed cure for insomnia. But they are there. Now, there's one point of note. They are the public rules, so they are somewhat redacted. There's about 5% rule redaction there for security purposes. But in the context of what we're talking about, none of these rules are redacted from that version. So if you download that rules, visa.com, search for rules, you'll see a link to download the PDF. If you search in those books under the words surcharge, convenience fee, or service fee, it will take you to all those rules and the detail about what I've been talking today. As well as that, if you went to visa.com and typed surcharge, it will take you to a bunch of surcharge guidance on there, descriptions of how signage should look, details, considerations about what might be the impacts of surcharging. But there's a ton of information on visa.com. And then the last thing, if there's any outstanding questions, anyone's welcome to email visa rules inquiries at visa.com. There is a 72-hour turnaround on that inbox. And the guys that run that inbox, they don't know I'm telling people about the email address, so don't tell them you heard it from me. But that is their job to answer those questions. So that's basically it. So I'm happy. I know we've only got a few minutes left, but I'm happy to take outstanding questions.
Rob, I actually do have some questions that were received. So before we take any open questions, let me ask the questions that had been emailed to me in advance, and I will just read them very quickly, and hopefully we can get a quick response. One of my clients has a sign up that says fees do not exceed card cost. Is it required? And if it is required, is there a different type of signage for surcharge, convenience fee, dual pricing?
Yeah, great question. So in our rules and on visa.com, we have clear guidance on the minimum elements that the surcharging notification must include. So, for example, it must not contain any language that implies Visa is charging that fee. Right? It must state that the surcharge is being assessed and applied by the merchant, not Visa. So we have that guidance there. When it comes to convenience fees and service fees, we don't offer guidance. We leave that piece to the merchant themselves. We determine that if the merchant does it incorrectly and surprises the cardholder with additional fees and upsets them, the cardholders are likely to vote with their feet. But we do regulate and describe quite heavily the signage for surcharging, and it's in the rule book and on visa.com.
Understand. Next question that I had was in Scott's presentation, and there are some costs for card that do exceed 3%. And in Scott's presentation today, for example, the business card section, just the interchange and assessments alone could push as high as with the transaction fee, could conceivably be 3% by itself before you have the processor markup. I know there was a statement made that if you're higher than 3, you should get a new processor. Well, there are some card types that could push it higher than 3.
That's a great question. Yeah, well, so the decision around reducing it to 3%, and yeah, I was responsible for that rule change, and for those who are at WSAA, saw me getting booed by almost 1,500 people when I was introduced as the person who cut the surcharge cap. But the reason we did that, there's two ways to play MDR, and I'm sure Scott's very familiar with this as well, which is you can pay pass-through pricing, which is as a merchant, you pay whatever the interchange and the pricing is around that card plus an additional fee. So if you get a regulated debit card, on a high value transaction, your acceptance cost is going to be very low on that transaction. Right. Equally, if you get a commercial card that has a higher interchange and it's a high value transaction, your acceptance cost on that with pass-through pricing will be significantly higher. And therefore, but what we're so you can do pass-through pricing, and what we established was that the majority of merchants out there, it's really only the really big players that do pass-through pricing. The majority of merchants pay what we call blended MDR, and that is a rounded rate of maybe 2.8%, no matter what product comes through. So whilst there were outliers that may exceed that 3%, the average interchange was significantly below 3%. And then with the awareness that the majority of merchants pay blended MDR, if you go to GoDaddy, for example, their website, last time I looked, they were offering 2.4% on all Visa transactions. So they selected a very low blended MDR rate. So that was why we were able to come to the conclusion that we could drop it below 3%, because most merchants are not paying high value MDR for the high value for the high priced products, but equally they're not benefiting from lower interchange on the regulated debit products either.
Right. What I'm hearing you say is it's in the middle, and although there may be 1 or 2 or 3 transactions that may exceed the overall blended average, will probably bring you into a position where the 3% is covering the cost.
Correct. Right.
Next question I have, Rob, is this was a Visa-centric call today. However, the other card brands, MasterCard, Discover, and American Express, have rules as well. To the extent that you can share, what can you provide as maybe guidance around other card types?
Yeah. So Amex is a complete mystery to us. They don't publish their rules publicly. I actually was at a conference last year, and the Amex person, when I introduced myself as and what I did for Visa, they left the room. Whereas MasterCard is much more transparent. They're as transparent as we are. So I know for a fact that MasterCard rules are very similar to ours. They do not have the same cap that we have. I think theirs is still at 4%. However, they also have a requirement that says you can't charge more to us than you do our competing brands. So right. By Visa reducing its surcharge cap, we kind of enabled MasterCard to reduce theirs as well. Now, I do know whilst I'm not aware of their mystery shopping like we are at the moment, I do know for a fact they retain quite a resilient compliance team, and that they investigate surcharging and various rules violations like this today. And as you know, most merchants are, at least when it comes to things with MasterCard, are not brand agnostic. So if we fix a merchant who's incorrectly surcharging for Visa, we probably fix it for MasterCard too. And we see they do the same too as well. You know, when they fix a merchant, we probably benefit from that. So.
Okay, thank you. We have there's 3 questions that were asked that were actually covered in the call, and I will just briefly recap them in a moment. But I will not necessarily the answer, but let the people know that they were covered. The last question that I do have that is unique is this particular accounting practice actually has a business partner who charges a technology fee on their hosted payment link that they receive. Is that permitted? I think you've already answered this, but they have it labeled as a technology fee.
It's a really interesting one because if they charge it to every payment method they accept, then it's totally permitted. So I always give this example. If one were to walk into Target and Target said, no matter how many items you buy and no matter how much that adds up to, we're going to charge you $10 just for walking into Target, just for making purchases. As long as they charge that fee to every payment method they accept, that's fine. With these technology fees, where I see them frequently applied is it's another incorrect name for a surcharge, because the technology fee only applies to card payments, and yet at the same merchant through the same site you can pay with ACH for free. And so again, it goes back to my point. Call it what you want. If it looks like a surcharge and walks like a surcharge, we're going to treat it as a surcharge. But to be clear, and it's a great question because I should have made this clear earlier, if a merchant charges any additional fees and they are applicable to every payment method, Visa does not regulate that. The only place that really does is New York, where New York says if you're going to do that, you have to do it up front or include it in the price from day one. You know, add it as a line item from day one, the first time the customer sees a price. But from Visa's point of view, as long as you charge it for everyone in an equal way, and by everyone I mean every payment method, it's right outside of our purview.
Well, your response there actually just knocked out the other 3 questions combined. Were all different iterations of can my in-store be different than my online? Can the surcharge rules exclude cash and ACH? And can I waive the charge for ACH? So your response there just covered the other 3 questions that were asked in advance of this call.
Excellent. I saw Nicole ask the question, it popped up on the screen, about what does Visa do about, I think it's third-party agents who might be gouging on price. So I want to be clear on this point, which I haven't covered, is Visa does not regulate in any sense how MDR is priced to merchants. The way we see that is that's market forces. If there's an acquirer out there or an ISO that wants to charge 10% MDR, we have no rules against that. There's certainly gouging, and they probably won't have many customers, but we do not regulate pricing to the merchant in the form of MDR in any way, in the same way we don't regulate interest rates on credit cards offered by our card issuers. That is a business decision there. We do not regulate it, but consumers have a habit of voting with their feet where those fees are excessive.
Very good. Now, I will just, as a quick brief pause here, it is 2:03. We are at the end of the hour, but we will continue. We have about 7 more minutes of content, and then we will be finished with the call. So do we have any others in the chat? Because right now I'm on a main screen. So are there any other chat questions? If there are not, I'm going to, is it okay then? I'm going to go ahead. Rob, thank you for covering the material you covered today. It's been very insightful. I will remind people before we move to the next slide that this call has been recorded. We will post the link to this call out on our PASBA, tried and true PASBA link website that you can find on your members page. And you can also find it when you do visit triedandtrueconsulting.com and go to the partners tab, and you'll find PASBA. You can click there and you'll be able to find this link in approximately 3 to 5 business days from today. So Scott, I know you're going to cover some pricing strategies, and then we're going to conclude the call just shortly after that.
Thank you, Don, and thank you, Rob, for adding so much clarity around the most common misunderstandings and improper pricing strategies. That leads perfectly into our last slide here, which is a bit of an eye chart, and thankfully I brought my optics here. But hopefully this slide, for those that can maybe reference this recorded presentation later if needed for this slide, the goal here is to help summarize a lot of what we've talked about today. So across the top, you'll see separate columns for all the different pricing options that are offered. And what I'll point out to start with is if you look at the first three columns starting from the left, flat rate, tiered, and interchange plus, which is labeled IC plus, which is abbreviated for interchange plus. Those three columns are the most common traditional pricing methods that you would see with a merchant provider. So I'll start with those three, and then I'll get into the last four because we spoke a lot about the last four. But flat rate pricing involves just what it says in the definition there. There's one flat rate applied to all transactions. And so right on the onset, that would indicate that the pricing is more simple to understand as a business owner. So you know what your cost is going to be, makes it easier to calculate your profit margin. But similarly, it might not surprise many of you that this flat rate pricing also represents the most profitable pricing method for the processors. So what you'll notice as I go through this, as the simplicity increases for the merchant, the business owner, oftentimes the cost increases, and therefore the profit to the processor increases. There's a relationship there. So the second column from the left is labeled tiered. And this is a very common pricing method you've seen historically, where you would have the lowest rate would be your card present, what was in the past called your swiped rate, now is dip your chip card into the reader or tap it on the screen. Card present would be the low rate. Then you'd have what was often called a mid-qualified rate or tier for card not present transactions. And then you would have non-qualified, which was the highest rate, and that was typically your commercial business cards, or perhaps a card not present transaction where other fraud prevention information was not passed. So that's a little bit less profitable for the processor, a little bit more complicated in pricing, and more challenging for the business owner to know on a given transaction what their cost is to figure out their profit margin. But a little bit easier because there's traditionally just three different tiers. You got your qualified, mid, and non. The third column is interchange plus. Now, this is the most transparent pricing method, and I believe one of the best pricing methods out there for that simple purpose. The pricing, over the years, interchange has become more confusing to business owners, the various costs. Just not to date and age Don and I, but when we first started in this industry, there were about 30 or 40 interchange categories. Now there's hundreds of categories. So it's certainly gotten more complex. So interchange plus is the lowest cost pricing method typically for the business owner, but it's also the most detailed. So when you get your statements, usually a couple extra pages, there's a lot more detail in there that itemizes all the interchange categories and so forth, but it results in lowest cost for the merchant. Those three pricing methods are the most traditional and kind of foundational pricing methods. A lot of what we talked about today, you might think of as more contemporary pricing methods, and that's the four on the right side. So I'll start with dual pricing, and this is a pricing method that has been around for a while, but gained a lot of popularity post-COVID, and that was referenced earlier by Rob, where there's a lot of misinformation and violations out there and so forth. But dual pricing, you might hear it go by another name called cash discount. And so what you'll see here, it's one of the more popular pricing methods today. One of the key things that Rob mentioned that I want to emphasize is to do this properly, you have to build in your processing fees into your advertised retail price. So whatever price you list on the shelf or on an invoice, that has the fee in it. And you have to disclose that that you're offering a cash discount, and so that there's two prices. So it's legal in all states, but the key there is that any fee that you build in must be built into the advertised price. And to say it the other way, to help avoid any confusion, you can't have the customer come to the cash register or go to pay and have an advertised price, say, of $100, and then when they go to pay and see that they're paying by credit card or a debit card, all of a sudden have a 3.5% fee, and now they're paying $103.50. That is not following the regulations. So the key is having that fee built in. But then you can offer a lower cash price from that advertised price. The next column is convenience fee. Rob talked quite a bit about this one. This is where it has to be a fixed fee, not a percentage. It's for card not present only transactions. And the real key here as well, another common violation is the business must offer a card present method to pay. And in that card present method, there cannot be a fee assessed. So you can't just add a convenience fee on and only offer card not present methods. So you can't just send all your billing on electronic invoices, charge a convenience fee, and then not offer to accept payments in person without a fee. So that's a couple key distinctions for convenience fee. And then the second from the right, the surcharge column, we talked about this one as well. That is where the advertised price is, let's say, $100, but then you add a surcharge of, let's say, 3%, because that's the maximum that's allowed, and we show that here in that top box. And so the total payment amount in this example would be $103, but the fee is limited to 3%. It can only be passed on credit cards only, cannot be passed on to a debit card, regardless if that debit card is processed by the cardholder entering their 4-digit PIN or by signing the receipt. So credit card only, and limited by 3% on surcharging. And then the last one is service fee. This one is predominantly government, utility, and higher education, as Robert mentioned when he went over this. So this doesn't apply to, our CPA firm partners, but could apply to some of their business customers. So that's kind of a quick overall summary. I would just close with pointing out that we know that this is complicated. There's a lot of moving parts here. So at any time, if any of you or any of your peers at your firms or even any business customers have any questions, Don and I are here to help answer those questions. And, we could certainly reach out to other resources such as Rob or other partners that we have to provide that education. That's the key thing here. And so, Don, I'll kind of turn it back to you to kind of summarize and close things for us. Thank you
again. Thank you again, Scott. Thank you again, Rob. I know in the convenience fee, we show a 3 to 4% here. It is a typo, but I will tell you that the general guidance that we give when we have that conversation is we look at your existing statements, we look at your invoicing, we kind of try to get an average and an estimate around the 3% mark. So that way, when you do determine what your fee is going to be, that you can consistently apply a fee that's going to cover at least 80% of your cost. So at the end of the day, we try to give you some guidance, but it will be a fixed fee. With that said, as Scott had mentioned here at the end, we are here to serve and educate PASBA and not just our members. There are associate members and there are clients for all of us. That is our number one objective, is to serve and educate in this industry. Of course, we want to try to secure business, but it starts with educating and serving you to provide the best possible solutions we can. How we do everything is us start with a statement review. Ideally, if you have a seasonal merchant, we like to look at a low, a medium, and a high season mark. If it is a consistently operating business, it's a business that is consistent in volume, we like to look at 3 statements, because we do know that card types may vary from month to month, and that could significantly change the pricing proposal. So the more information we have, the better we can do. We can record a video with you if you'd like us to do this conversation on a shorter level. Or we can break this up. We can record a video that you can share with your clients about pricing. We have a website. Please use that website. There's blogs, there's merchant information of their services. There's plenty of information and content on our site that will help to provide educational information for you to share with your clients. As Scott had mentioned, you may always call, email, text us. We're always available for those kind of questions. And if you'd like, we can arrange a conference call if you have a client coming in that you want us to do a review for you. And just, again, we're not going to push for a sale. We'd like to do business. Hopefully we see opportunities, but at minimum, we'd like to educate you and your office and your clients. At the end of the day, it's about being mutually beneficial and a resource for you to help you provide a higher level of service. I will tell you that the firms that we do some business with that have sent us clients, in some cases, we've been able to save enough money that actually offsets the cost of your services as the accounting firm on a monthly basis. So those larger clients could actually be getting your services for free by offsetting the merchant processing cost by utilizing us. Again, it is a fantastic relationship we try to create that is mutually beneficial. At the end of the day, it's services for you as a client or as your clients. And as always, we believe we're going to be tried and true and consistent in all we do. So we thank you for today's call. Again, thank you, Scott and Rob, for presenting. And we appreciate everybody that's been in attendance. We hope you have a wonderful day, and thank you again for attending.
Thank you.